In this video, we're going to be talking about exchange traded funds or ETFs. Basically, an ETF is a portfolio, a collection of assets, and the performance of this portfolio is specially designed to match a particular index. For example, if we have an ETF that tracks the performance of the US S&P 500 index, how it works? Well, the fund will buy shares in the 500 companies that make up the S&P 500 index. And then because this fund itself is exchange traded, which is the ET part of the ETF, we can actually buy and sell shares in this ETF, in this portfolio. If I own shares in this ETF that tracks the S&P 500 index, basically I own a piece of this portfolio. And simply by buying one share in the ETF, I would have a portfolio of 500 companies. And that's because in theory, the performance of the ETF is designed to follow the index that it is intended to track. So what we can see here is that the performance of this ETF that tracks the S&P 500 versus the performance of the S&P 500 index, we see that the charts, they're more or less similar. Now, why would I want to invest in an ETF? What are the advantages? The first advantage is that using ETFs is a relatively easy way to get started investing. We know that the US market in the long term is trending upwards. 76% of the time, the US market has positive growth years. And on average, the US market grows by about 10 to 11% every year, on average. It seems to me that the most mindless and easiest way to invest in the US stock market is simply to buy the index. ETFs allow us to do that very easily because the ETF already holds that portfolio of 500 stocks that make up the S&P 500 index. Simply by buying the ETF, we can enjoy that 10 to 11% growth on average per year without having to assemble this 500 company portfolio by ourselves. So ETFs are a relatively easy way to get started investing. Secondly, an ETF is a way more diversified investment compared to buying shares in any single company. Look, as strong as a company may be, as good as the business of the company may be, nobody knows what's going to happen in the future. When it comes to investing, nothing is 100% certain. For example, Netflix is one of the FANG companies. And if you've not heard of the term FANG, basically it's the tech companies that are sort of like seen to have the strongest business in the market. And if you had bought Netflix in 2021, at some point this year, you would have been down 80%. Now, if your portfolio had only contained Netflix stocks, which were bought in 2021, your whole portfolio is going to be down 80%. Whereas in the same period of time, the entire stock market was only down about 20%. At this point in time, it's very difficult to say if the shares of Netflix is ever going to regain its losses. Based on my observation, I think Netflix is facing strong headwinds right now, both from increasing competition as well as rising costs. So rather than just having one company in our investment portfolio, an ETF is a more diversified investment because we're buying a basket of stocks rather than just one particular stock. The third advantage to ETFs is that they are traded on a stock exchange, so we can buy, sell, and trade them just like other stocks. Many of these ETFs even have options, and this means that we can create long and short positions using ETFs that can benefit when the overall market goes up, goes down, or even goes sideways. Having ETFs and options on ETFs gives us the ability to hedge our portfolio exposures. In this video here, I talked about how I previously used an option strategy on an ETF known as a bear put spread to benefit from a potential downward movement in the overall stock market. The fourth advantage is that there's a wide range of ETFs that we can choose from. So far, we've only been talking about the ones that track the major US market stock indices like the S&P 500, the Nasdaq, or even the Dow Jones. But there are ETFs that even track specific sectors of the market, specific industries such as energy, consumer staples, and so many others. So if I'm bullish on a particular sector, but I don't want to be exposed to the risk of investing in one single stock, I can invest in the ETF, which holds a basket, a portfolio of stocks that are the best companies within that particular industry, within that particular sector. So there's a wide range of ETFs that we can choose from. It gives us the possibility of investing in a more diversified way rather than just, having to pick and choose single companies. The fifth advantage that we're going to talk about today is that ETFs are professionally managed. So if I don't have the time to go, read up on investments and pick stocks and that kind of thing, by buying an ETF, it's like I'm hiring a professional manager to do it for me. But of course, I have to choose a good professional manager. When it comes to ETFs, a solid manager that we are looking for should be someone who is able to pick good investments, keep the expenses of the fund low, and ensure that the performance of the fund is as close as possible to the index that this fund is designed to track. So there we have it. These are the 5 main advantages to why I think that ETFs are a good investment, especially for someone who's just starting out investing. In an upcoming video, I'll talk more about the ETFs that I invest in. If you're interested in finding out about that, make sure you are subscribed. So that's it for today's video. Like, comment, subscribe if you found it to be helpful, and I'll see you in the next one.